Today, we are diving deep into the engine room of Malaysia's world-leading Islamic finance industry. We're going to talk about a concept called Tawarruq, a financial tool so powerful, so essential, that some have called it the industry's magic lamp.
So, to really get why Tawarruq is such a big deal, you have to start with the fundamental challenge for all of Islamic finance. You see, the Quran forbids charging or paying interest, which is known as riba. So, how does a modern economy work? I mean, how do you get a personal loan, or finance a car, or even use a credit card if the whole idea of interest is off the table? Well, the answer, at least in Malaysia and a lot of the Gulf, is Tawarruq. At its core, it's a really clever series of sales designed to get cash into your hands. Let's say you need cash. So, you buy something on credit, maybe for $110 that you'll pay back over a year. Then you immediately turn around and sell that exact same thing to someone else for cash right now, maybe for $100. And just like that, you've got your $100 in cash and a debt of $110 to the person who sold you the item in the first place.
Okay, let's walk through that one more time. Step 1. You, the customer, go to a financier because you need cash. Step 2. Now the financier doesn't just give you money. Instead, they sell you a specific commodity. Let's say it's a ton of crude palm oil on credit. Step 3. You, of course, never actually wanted the palm oil, so you immediately sell it to a completely different person on the open market for cash. And step 4, boom, you have the cash you needed, and now you just have to pay the financier back for the palm oil over time, at that slightly higher price.
But right here is where it gets messy. From the very beginning, critics have argued that this is just a loophole, a clever legal trick. They say the real point isn't to trade commodities, it's to get cash now in exchange for more cash later. And to them, that looks, smells, and feels an awful lot like a loan with interest, just with a few extra steps thrown in the middle.
Now, and this is super important, you've got to understand that not all Tawarruq is seen as the same. Scholars draw a really clear line between two types. First, there's classical Tawarruq. That's where you, the customer, have to go out and arrange that second sale all by yourself. Most scholars are okay with that. But then you have the modern banking version, organized Tawarruq. That's where the bank handles the whole shebang for you, acting as your agent to resell the commodity instantly. And that efficiency is exactly what makes it so controversial.
And this difference in opinion has created a huge global divide. You've got major international bodies like the IOIC FIC Academy that have flat-out ruled organized Tawarruq is impermissible, calling it a trick. You've got AAOIFI, which sets the standards for tons of Islamic banks, and they restrict it, saying the bank absolutely cannot act as the agent for the resale. And then you have Malaysia's central bank, Bank Negara. They explicitly permit it, agency agreement and all. And that right there is the key to understanding Malaysia's whole approach.
And this is where Malaysia's story really takes a turn. The country didn't just quietly approve Tawarruq. No, it placed a massive bet on it. It made this controversial tool the absolute bedrock of its entire Islamic banking system.
And that's why that magic lamp quote is just so perfect. For banks in Malaysia, Tawarruq became the answer to pretty much every problem. It was the key that let them create a full menu of products that could go head-to-head with any conventional bank, all while staying compliant with their local Sharia rules.
But this didn't just happen overnight. You know, back in the day, Malaysian banks used something called INA, which is kind of like Tawarruq's even more controversial cousin. Most scholars internationally really don't like it. So to get more aligned with global standards, Malaysia's Sharia Council gave the official green light to organize Tawarruq back in 2005, seeing it as a much better alternative. And that decision paved the way for it to become the powerhouse it is today.
Okay, so that's the theory. But what does this all actually look like for the average person? You know, how does this complicated series of commodity trades actually become the loan you used to buy a car?
Well, the scale of it is just staggering. This isn't some obscure financial instrument. It is the engine behind personal loans, home financing, credit cards, even term deposits at all the major Malaysian banks. Seriously, if you're an Islamic banking customer in Malaysia, chances are you are using a Tawarruq-based product, whether you know it or not.
All right, let's take an example that seems kind of weird at first. A deposit account. I mean, how can a bunch of sales help a bank take your deposit and give you a profit? This is where they use a clever variation called reverse Tawarruq.
The whole process is basically flipped on its head. You deposit your money, then the bank, acting as your agent, uses your cash to buy a commodity on your behalf. Then, the bank immediately buys that commodity from you on credit for a higher price that includes your profit.
So at the end of the term, the bank pays you back your original deposit plus that profit. And this structure is what lets them offer principal-guaranteed savings products, which is actually a legal requirement there.
So right about now, you're probably wondering, with millions of these transactions happening every single day, where are all these commodities? Where are they being bought and sold? This leads us to Malaysia's single biggest innovation, designed specifically to address all those Sharia criticisms, a dedicated electronic platform.
It's called the Bursa Suk Al Sila, or BSAS. The easiest way to think about it is like a stock exchange, but instead of trading company shares, it's trading huge amounts of things like crude palm oil, and its whole purpose is to make these Tawarruq deals happen for the banks.
And the process is all automated, and it's lightning fast. A bank that needs to fund a loan just puts in a bid for a commodity on the platform. The system matches the order, and, this is the key part, it issues an electronic certificate to prove ownership. The bank then sells that e-certificate to the customer on credit, and then immediately, on the customer's behalf, sells it right back to the market through the platform for cash. The whole thing can be over in seconds.
You see, this whole platform was built to counter those classic criticisms. The e-certificates are meant to prove ownership. They only trade in real existing assets. The automated trading engine is supposed to stop any funny business or collusion. And the whole process is transparent, with confirmation sent to everyone involved. It is Malaysia's high-tech answer to all the skeptics.
So, case closed, right? With this sophisticated system, has Malaysia finally put the debate to rest? Well, as it turns out, not quite. A few big controversies are still hanging around. For one, the whole system hinges on the bank acting as the customer's agent, or wakil, which is the exact thing that bodies like AAOFI say you can't do. Some critics also still wonder if the physical assets really exist to back the enormous volume of daily trades. And, if nobody ever actually intends to take delivery of the palm oil, does the whole thing just start to look like a fictitious sale designed only to move money around? And all of this brings us back to the final, most provocative question. Does this complex, high-tech system represent true, groundbreaking innovation in finance? Or are its critics right? Is it just an elaborate way of copying the results of conventional banking, but using Islamic terms to cover it up? That is the billion-dollar question at the very heart of Malaysia's magic lamp.